Homeownership is often celebrated for its emotional and financial rewards, building equity, having a place to call your own, and creating lasting memories. However, many homeowners aren't fully aware of the hidden tax advantages that come with owning property. Beyond the commonly known mortgage interest deduction, the U.S. tax code offers several less publicized benefits that can reduce your taxable income and boost your savings. Whether you're a first-time buyer or a seasoned homeowner, understanding these tax perks can maximize your financial potential. Let's dive into the top 10 little-known tax benefits of homeownership and how you can take full advantage of them. 1. Mortgage insurance premium deduction. If you put less than 20% down on your home, you're likely paying private mortgage insurance (PMI). Fortunately, the IRS allows eligible homeowners to deduct their PMI payments, along with government-backed insurance premiums like FHA, VA, and USDA loan insurance. Although this deduction has phased in and out of availability over recent years, it's important to check if it's active for the current tax year. It's often subject to income limits, so be sure to review eligibility with a tax professional. 2. Energy-efficient home improvement credits. Investing in energy-efficient upgrades, such as installing solar panels, geothermal heat pumps, energy-efficient windows, or insulation, can make you eligible for substantial tax credits. The Residential Clean Energy Credit allows homeowners to claim a percentage of the cost of renewable energy installations. These incentives not only help the environment but also offer major tax savings, reducing your tax liability dollar for dollar rather than just cutting your taxable income. 3. Home office deduction. If you run a small business or freelance from your home, you may qualify for the home office deduction. This benefit allows you to deduct a portion of your mortgage interest, utilities, insurance, and even home repairs, based on the square footage of your dedicated office space. While there are strict IRS rules, like requiring the space to be used regularly and exclusively for business, qualifying can substantially lower your taxable income if you meet the criteria. 4. Property tax deduction. Although the 2017 Tax Cuts and Jobs Act capped the combined deduction for state and local taxes, SALT, at $10,000, you can still deduct property taxes you pay on your primary and secondary residences up to that limit. Property taxes can be a major annual expense, so deducting them offers meaningful relief when filing your federal tax return. 5. Exclusion of capital gains on home sale. One of the biggest but lesser-known tax benefits is the capital gains exclusion when you sell your home. If you've lived in your home for at least 2 of the last 5 years before selling, you can exclude up to $250,000 of capital gains from your income if you're single, or up to $500,000 if married filing jointly. This can translate into huge tax savings, making homeownership one of the most lucrative long-term investments available. 6. Points deduction on mortgage. When you buy a home and pay points to your lender to lower your mortgage interest rate, the IRS often allows you to deduct those points as prepaid interest in the year you purchase the home. Even when refinancing, points may be deductible, though typically spread over the life of the loan instead of in a single year. This deduction can save you hundreds or thousands of dollars, depending on the size of your mortgage and the number of points paid. 7. Home equity loan interest deduction for certain uses. After the 2017 tax law changes, interest on home equity loans and home equity lines of credit, HELOCs, is no longer broadly deductible, unless the loan is used specifically to buy, build, or substantially improve your home. If you're borrowing to remodel a kitchen, add a room, or replace a roof, the interest may still qualify for a deduction. Using home equity for these purposes can thus offer a hidden tax advantage while also increasing your home's value. 8. Medical home improvements deduction. If you make home improvements for medical reasons, such as installing wheelchair ramps, widening doorways, or modifying bathrooms, and these modifications don't increase your property value, you may be able to deduct the costs as medical expenses. To qualify, your total medical expenses must exceed a certain percentage of your adjusted gross income, AGI. But for many families, especially those with elderly or disabled members, this can provide substantial tax relief. 9. Rental property tax benefits, if you rent part-time. If you occasionally rent out your home, say, during peak tourist seasons or special local events, you can earn tax-free rental income for up to 14 days per year. Known as the Masters Rule, after homeowners in Augusta, Georgia, who rent out homes during the Masters Golf Tournament. This rule lets you pocket short-term rental income tax-free as long as you meet the time limit. Beyond that, if you rent for longer periods, you may be eligible to deduct expenses tied to the rental portion of your property. 10. Casualty loss deduction for disaster areas. If your home is damaged or destroyed in a federally declared disaster area, you may be eligible for a casualty loss deduction. This deduction allows you to write off a portion of the unreimbursed losses caused by natural disasters like hurricanes, floods, or wildfires. While this benefit is subject to specific rules and thresholds, it can provide much-needed financial relief during challenging times and help offset repair or rebuilding costs. Homeownership isn't just about building personal equity and stability. It's also filled with numerous hidden tax benefits that can save you thousands of dollars over time. From deducting mortgage insurance premiums to capitalizing on tax-free rental income and credits for energy-efficient upgrades, the opportunities to maximize your savings are more abundant than most realize. By understanding and leveraging these little-known tax advantages, you can stretch your home investment further and build stronger financial security. Always consult a qualified tax advisor to ensure you qualify for these deductions and credits and to tailor a strategy specific to your situation. Homeownership offers both emotional and financial rewards. Make sure you're capturing every benefit it has to offer.